And why would an investor not buy, I mean, we talk about trackers, they're very cheap. Why would they not buy a tracker over, let's say, City of London?
Well, I think we provide a yield as part of our objective, a yield above the index. And also we've got this consistent dividend growth. I mean, 25% of FTSE 350 companies cut their dividends in the period around the financial crisis. And so I think that the income, part of our overall objective is delivering income, and we can focus on that more than you would get through the index itself.
What would you say your style was?
Well, I think I'd say it's twofold. It's valuation driven, in terms of, I think ultimately share price valuation determines return. So if you buy a really brilliant company but it's hideously expensive, you're likely to end up suffering at some point. Whilst I like to buy kind of good companies but on reasonable ratings. And then the second thing, I'm quite a conservative personality, and I think the fund reflects my personality. And I quite like a spread of investments and companies, particularly in cyclical industries which are prone to ups and downs, to have strong balance sheets. Because in a downturn, if you've got a weak balance sheet, you're owing too much debt to your bank manager, then you're likely to cut your dividend, because you've got to think of your bank manager first.
Are you seeing a lot of merger and acquisition activity?
Well, it's interesting. There isn't that much at the moment in retailing, and I think that's a sign that people can't quite see light at the end of the tunnel. But it'll be an interesting sign when that begins to happen. That might be quite a positive sign when we finally see some more of that.
It's interesting because there's a lot elsewhere, isn't there?
Yes, there is.
And people are obviously, corporate buyers seem to be looking at the UK market and going, "Gosh, there's lots of value there." Weak sterling, and sort of. There seems to have been a good time for certain kind of trophy assets, but yes, obviously nobody's finding any bargains in retail yet.
What would be the effect of a hard Brexit on the fund's strategy in the short term?
Well, I think Brexit, the barometer of Brexit is the pound or sterling, and that is, I mean, as you probably remember, the day after we left the referendum, the pound fell good 10% a few days afterwards against the dollar, and of course that's actually quite positive for a lot of companies in the portfolio, majority of companies, because most of the companies in the City of London portfolio have got big overseas weightings, and so big overseas operations, and so the value of those profits from overseas and dividends in translated back to sterling will go up if sterling falls, and that did happen after the referendum. But I suppose the impact on the domestic economy could be quite tricky, but we're a very resilient country.